Hi there, welcome to Nappy Invest. Today, Kogan, talking about Kogan. And one of the main reasons I'll be talking about Kogan is because the share price has decreased 57% since their all-time high share price of about $25 that was reached in October last year. So I'll be talking about why the share price has decreased by this amount in that period of time, about 5 or 6 months. But this is actually not unusual for Kogan. We have seen the share price of this company increase and decrease by a significant amount in around a 6-month to a year period. So sentiment plays a massive role in the share price movement of this company, and also plays a role in other companies as well. So I'm going to talk about why the share price has been decreasing, but I'll also be talking about why this is one of my favorite companies to trade, because you can just trade the sentiment in this company and just ride that sentiment for 6 months to a year, and then as soon as that sentiment shifts, sell or buy back in. Now, there are some people out there who believe in the buy and hold strategy. That is the best strategy, and you don't have to worry about these swings up and down in the share price. I do think that's a little bit naive, because they believe you can't time your buys and sells. And now, I do have a feeling that when they're saying you can't time the market, they're just thinking about absolute highs and lows. And it is hard to buy and sell at the absolute highs and lows, but you can time your buys and sells at near the highs and lows. And all you have to do is be able to read a chart. And I believe technical analysis among a lot of investors is really lacking, because if you can read a chart, you can absolutely supercharge your returns. And the other thing people don't realize is, if you can understand human psychology, how that plays a significant role in the movement of share prices, you can also supercharge your returns. So in this video, I'm going to be looking at Kogan's chart. So if you don't like to look at charts, maybe this is the video where you can get started, and I'll try to explain and show you in some of these charts how important human psychology is and how important it is to read a chart. So let's get into the first slide. So the first chart I want to show you is the weekly chart since Kogan IPO'd in mid-2016. And I really like to look at weekly charts because you can see how important sentiment plays a role in the movement of share prices through time. And if you can understand these waves in the share price movements, you can really supercharge your returns. I'll say that word over and over again, supercharging returns, because the whole point of investing is to make money, and as much money as you can. So why, in my opinion, why would you buy an ETF that is just market average returns when you can take the advantages you have as a private investor to significantly beat the market returns? And a simple way of beating the market returns is to understand the movement of share prices, how it relates to sentiment, and how sentiment relates to human psychology. So this chart perfectly shows you the role of human psychology. There's no reason why Kogan's share price should be moving up in waves and down in waves. There's no reason behind that, except for human sentiment changes. So if you go back to July 2016, when they IPO'd, the share price was around $1.50. There wasn't a lot of excitement in the market at that point in time, because the share price just consolidated or moved sideways for about a year, around $1.50. It was above $1.50 at times and below that period. So if you had a high conviction in Kogan at that point in time, this was the perfect time to buy in. And then positive sentiment came into the market for Kogan, and this positive sentiment lasted 9 months. I got a positive plus there because the share price went from $1.50 to $10. This is the time when I first bought into Kogan, and I made quite good returns. You can see that really started in July 2017, and the share price rises finished in around about February, March of 2018. So about a 9-month period where the share price rose. Then it consolidated for a few months, and then we had the next wave of the share price movement, and that was negative. So around this time, I do believe Russell Kogan did sell out of some of his shares, and when he sells out of some of his shares, that does cause a bit of negative sentiment, and the share price fell from $10 to $3 in 7 months. So you could have seen that share price consolidating, and then when it moved below a level, a sell level, so if you got a sell signal, that's when you would have sold and locked in your profits. And then you would have seen the share price just keep on falling and falling. And as it kept on falling, I remember this time I was becoming more and more interested in taking a position, but I didn't take a position until I got a buy signal. And that buy signal happened around about the start of 2019. And then we had another rally in the share price. And this rally in the share price happened over 1 year period. So you could have been holding this company, Kogan, for a year, and you could have seen at least a double in your returns. So the share price did move from $3 at the low to $8. And then just before COVID-19 financial panic, there was some negative news that came into Kogan. So the share price actually fell before the rest of the stock market fell. And we did see a little bit of negative sentiment drive Kogan's share price from about $8 to $4 in a few months. And then, of course, a massive positive, it was about 7 months, massive positive sentiment came into the market for companies like Kogan. So any sort of e-commerce retail companies, we just saw their share price explode, and Kogan definitely saw their share price explode, going from $4 to a high of $25. So a six-bagger in 7 months. Again, positive sentiment. And that positive sentiment and then started to turn negative. And it really started to turn negative in November of 2020. And I think the first catalyst was when Pfizer released their positive vaccine news to the market. That was November 10. We did see the share price of Kogan fall 17% on that day. And that was the first sign of the sentiment in Kogan starting to shift. And then we had a wave of negative news come into the market for Kogan, and that has led to the share price decreasing. And this is the wave we're right now, another negative wave of sentiment around Kogan. It's seen the share price fall from $25 to a current share price of $10.50. And that has happened over 6 months. So how low can the share price go? That's probably the question right now. But this negative sentiment has remained with Kogan. There's no point buying in right now because there's still negative sentiment. I've seen people call this company a dog of a stock. But as that negative sentiment increases, and it will increase the further the share price falls, that becomes a better and better time to buy in, because the best time to buy into a company when everyone else is fearful. Now I just want to hone in to the last year of the Kogan. And about a year ago, April 2020, the share price was $7, and we were seeing the development of an uptrend at that point in time. So if you bought in at $7 and maintained a holding in Kogan through the uptrend, you would have been holding until late October, when that uptrend was broken at $22. So you've done very well, 4 times the money during that period. Now, there are some buy and hold investors who believe looking at a chart is complete hocus pocus. There's no point. You can't time the tops and bottoms of the market or the share price. And that is actually true. It is hard to time the bottom and the top of the share price. But that's not the point of the momentum and sentiment strategy. It's not about timing the tops and bottoms. It's about timing the shifts in sentiment and just finding when those sentiment and momentum shifts happen. And when you get that signal, that's when you buy or sell. And we had a definite sell signal in Kogan in late October of 2020. And if you sold out at $22, you would have missed your capital decreasing by 50% since you had that sell signal. So all those buy and hold investors have seen that capital in Kogan decrease by 50% in the meantime, because they don't believe you can read a chart successfully. So I do believe they're missing the point. And I believe everyone who doesn't look at a chart when they're investing is doing themselves a massive disservice, because they believe investing is all about holding for the long term, and the short-term movements or even medium-term movements in the share price mean nothing. But the whole point of investing is to maximize your wealth and your returns. And when you can't look at charts, you're not doing that. You actually are minimizing your returns, because investing is half fundamental and half technical. And if you actually completely ignore one half of the equation, you won't maximize your returns in the long term. And this should be a perfect example of how you can maximize your returns by just trading the shifts in sentiment of one simple company. I'm just going to maintain the daily chart over the past year and keep that uptrend line that I introduced in the previous slide. And if you did sell out when we had that sell signal in late October, you would have missed all the negative news that has come in the last 6 months. So in this slide, I'm just going to look at all the negative news that has pulled the share price in Kogan from $25 to a low of about $10.50 last time I looked. So on November 10, there was news of a successful Pfizer vaccine, had something like a success rate of 90%. The share price in Kogan fell 17% on that day. So this was not company-specific news, but the market understood that a vaccine, when that would cure the world of COVID-19, was going to be negative for Kogan because people would be going out to shopping centres again and spending the money in physical stores, not online. So the market did see that was negative for Kogan, and the share price went from $22 to a low of about $15.50. Then we saw a bit of a short-term uptrend. I actually did take a position at this point in time to take advantage of this short-term uptrend. But then in late January, we had a business update from the company, and that was a sell signal because that uptrend did break during that update, and the share price fell 9% on that day. And that was the catalyst for new re-rating and new negative sentiment coming into the market for Kogan, and the share price has just kept on falling from that business update in January. So the last 3 months or so, share price has gone from $18 to $10.50. Then we saw the half-yearly results in February. Again, the share price fell 10%, and that was confirmation of negative sentiment in the company. No point buying into Kogan at this point in time because a well-defined downtrend was in play intact. So what you're waiting for at this point in time was this downtrend to be broken. Has it been broken? No, it has. In fact, we had more negative news on April, was it the 23rd or so, with their business date, and the share price has dropped 14% on that day. When does this downtrend going to break? We don't know. That's the whole point in this. We wait for confirmation of the downtrend stopping or finishing, and that's when you might take a position. Some people buy in way too soon. They see the share price falling and they think the share price is lower than it was a month ago. Great value, and that's the wrong sort of investing strategy to have because you are possibly catching a falling knife, and you don't want to do that. Just wait for confirmation, and that's how you do maximize your returns in the long term. So I want to talk about the April business day quite quickly with Kogan. There were a couple of things I did like, but many issues in regards to the performance of the company through the last 3 months. One issue I did have when they compared or mentioned how their gross sales and revenue grew by a certain amount, 47% and 65%, they don't mention what they're comparing that to. Is it previous corresponding period or the previous quarter? So I had to assume that they're comparing the growth rates to the previous corresponding period or quarter 3 in financial year 20. But that can be a little bit misleading because in the previous year or corresponding period, they only had Kogan. Then they acquired Mighty Ape, and this growth rate includes Kogan and Mighty Ape. So the company, the overall group, should be improving simply because they made that acquisition of Mighty Ape. I do believe later on in the announcement they did compare or did mention how Kogan itself has grown and how Mighty Ape has grown. So I do like the fact they did differentiate between the two growth rates of both businesses. They did mention also the adjusted EBITDA declined by more than 24% for the group, but Kogan itself actually declined by 42%. So what are some of the things that concern me in this report? Of course, it was the adjusted EBITDA down 24% or 42% for Kogan. Now, this was concerning for me simply because it showed you the management didn't quite have an understanding of what the demand for their products or the company were going to be like. And this was just sort of a lack of understanding of the consumer. I think it's very important for managements of these sort of companies to have an understanding of where the consumer is heading or thinking. And they assumed the demand for their products was going to continue as it has for the last 9 months, but it didn't. Demand was lower than previous 9 months, which meant they had larger levels of inventory, and larger levels of inventory means higher warehouse and storage costs. And that was one of the reasons we did see a poorer performance in this quarter. Some of the other things they did blame for a poor performance was demurrage fees, and this has to do with high warehouse and storage costs and high levels of inventory. So when a ship comes to port, there is a time allotted they have to unload the cargo, and because I think of higher levels of inventory, they just took a little bit more time to unload the ships, and if they take too long to unload ships, they do occur demurrage fees. Another thing they blamed was equity-based compensation. This is fairly cute, and probably shouldn't say cute. I'm not a big fan of equity-based compensation, particularly for companies like this. There's other ways you can compensate your management, and I do believe any sort of compensation should be long-term performance of the company, and they should be compensated in about 5 years. If the company can continue to perform during that time period, that's when they should be compensated. I think this was very non-shareholder friendly sort of thing for the company to do, and I'm not a big fan of when management decides on non-shareholder friendly sort of things or activities. And finally, they blamed inflation, which is probably the first company I've seen blame inflation for a poorer performance of the company. They also mentioned there was two sort of areas of inflation. Products in particular, those products that have silicone chips and LCD panels. They also mentioned international shipping is considerably more expensive than it has been. So I think there's a lot of companies who do use international shipping. So this makes me think we're going to see further updates from other companies mentioning their costs have increased over the past few months because of increased international shipping. It would be a little bit of miss of me to just focus on Kogan, because Kogan was not the only e-commerce retail company that released a trading update to the market in the previous or the prior 2 days before Kogan released their announcement. Temple & Webster and Redbubble both released trading updates. On the 21st of April, Temple & Webster released their COVID-19 trading update, and the share price fell 11%. So that should have been a harbinger for what might happen if Kogan released a trading update to the market. The chart for Temple & Webster doesn't look quite as bad as Kogan. We did see the catalyst or the uptrend in Temple & Webster last until just the same time as Kogan, late October, and share price got to a high of $14, and the share price has been going sideways or just drifting down ever since then. And we have seen share price fall to about $9.40, but not quite as bad looking chart for Temple & Webster. When you look at Redbubble, they released their trading update on the 22nd of April, and the market hated that one, down 23%. Funny thing with Redbubble is their uptrend in their share price lasted to January or late January, early February of 2021, when the share price got to a high of 7. But we've seen a fairly good sell-off over the past few months with Redbubble, and share price has fallen from $7 to $4. And right now we probably are seeing a new downtrend forming with the Redbubble share price. Now, if I was not a shareholder of any of these companies and I did like this sector, which I actually am a fan of this sector and a few of these companies, now is not the time to buy in, because all companies are going through a period of negative sentiment. So all we have to do, if we're keen on buying into these companies, is wait for a buy signal. And that buy signal could be in a few days, a few weeks, a few months. I think more than likely it's going to be a few months from here on in. Ideally, I'd like to see a period of consolidation, but we just don't know when that's going to be. So the whole point of this is now just to be patient. And patient investor is a more successful investor. And that's all I've got on this update for Kogan, talking about why the share price is down 57% in the past 6 months. I'm a big fan of this company over the long term, but I do think this is an ideal trading company. You can really maximize your returns if you're able to read charts and understand human psychology. That's all for this video. And the last thing I should say is I'm not a financial advisor. So if you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's all. Have a good day. Bye.